Hey, what's up everybody? Zach is back with another episode of Journey to $1 million. And even though we were down in the dip, but we're coming back up. We're getting paid today because we bought that dip. And hopefully you guys bought the dip with me. I know there was a lot of talk about the pending crash. The market is crashing. Stock market going down. And even though it felt like that a little bit, not really though, because we're already going back up and most of the market, like Dow Jones, S&P, they hit that 50-day moving average and they bounced right off of it, and also some trend line support that we had. So overall, not a big deal. It's pretty much what I thought, as it was a transition from growth tech into more the recovery stocks. So today we are going to go over those recovery stocks, try to find a play that we can make a bunch of money on while the economy is opening back up. Things are on the up and up, and we are going to make that money. So let's go ahead and jump right into this. The blog is live on prostockadvice.com, so go ahead and pull that up on your screens and check it out while I'm checking it out. And I do appreciate you guys tuning in today, so go ahead and smash that like button and subscribe. We're almost at 1,200 subscribers, and we're growing really fast, so I do appreciate that, guys. All right. So we paid off. S&P is up 1.1%. NASDAQ is up 1%. Dow Jones is 1.3%, so that is pretty big. And if you have the 3X leveraged, you're making pretty good money today. Overall, I'm up 5.8%. Or about 38,000. At the time I wrote this, it was actually 37,000. But hey, aftermarket, we're going up even more, guys. How about that? You still think that we're going to crash anytime soon? Or you think the stimulus is going to prop up the economy? And actually, we're opening up. So these, like Dow Jones, is actually didn't even really drop. If it was a true market crash, probably the Dow would also be crashing. That's just my opinion. I can be totally wrong about that. We could just hit an iceberg tomorrow and our ship could sink. But anyways, the most notable picks today, CLII was up more than 11%. MVIS was up more than 10%. And LAC, the Lithium Americas, is 7.5%. So if you guys had any positions on those, you're probably printing money today. And if you're wondering about that, go ahead and check out my website. And at the top right, there is a search box. So if you want to know, oh, well, when did Zach talk about these stocks first? How much are they up since he started talking about them? Well, it's simple. So you want to go MVIS. You go up here. Go ahead and type MVIS. And you're going to see. Hover over this, and it was February the 8th. We first wrote about it. And then also we talked about it again on February the 11th. And you can check those out if you click on it and then go down here, find the MVIS. Here it is right here. Microvision. Those were my thoughts. Here was my entry as targets. And this is what it looked like when we first. Well, it was at about 12 and we were thinking about buying it in our buy zone. But maybe you guys dollar cost averaged into it. You know, it just depends on what you think. I'm not going to tell you exactly what price to buy it and exactly what to buy, a call or put or whatever, a leap. But anyways, you guys get the point. So then if we go ahead and take a look at the MVIS on the good old Webull. And if you don't have a Webull, guys, go ahead and check the link in the description. They're giving away free stocks. And sure enough, it's gone up. It's actually hit our target price, but it's pulling back, so it is approaching our buy zone. But nevertheless, let's move on. So if you guys want to check that out, remember, use the search box. It's a little bit helpful. And I know some of my followers on Twitter, we saw some people make a lot of money actually in MVIS. And if you check out in the Discord, link in the description, the VIP section, priority questions, and also the Wall of Fame. So if you're making money from my picks, go ahead and send me screenshots and you will make it to the Wall of Fame. All right. So anyways, the positions we filled today, it was interesting. We're in an Amazon Condor, which is actually up 10% at market close. So that's doing pretty good. And basically, remember, the point of a Condor is if it stays flat, we're going to make the most money. If it goes up a lot or goes down a lot, we're going to lose. But the max loss is about $800 since that's what we paid for it. So it's not all that bad. And the max gain on this, if I remember correctly, was like $3,700. So if there's 4 legs. So if it's in between, if it finishes in between these 2 legs at 30.95 and 31.40, the price of Amazon, that is, finishes in between those, that's where we make our most gains. But anyways, we dollar cost averaged down on Apple. We were dollar cost averaging CCIV, not very much, 25 at a time because it is going down. But overall, the merger with Lucid is confirmed. It's come off the high of like $64. So we're going to keep dollar cost averaging on the way down. I think our cost basis is about 33.5 right now. So, and it's trading for 28. So we can go ahead and check that out really quick. Excuse me. But I think this is overall good. We're just going to see how much it's going to run down. It's blown through the support. It's blown through my buy zone, but I will keep dollar cost averaging. I suspect it's going down to the 50-day moving. So we will keep buying down to 22. I suspect that's what's going to happen. But this buy zone we could probably move down here. But anything right now is probably not a good idea. Don't go off and buy 500 shares right now and spend all your money on this. But dollar cost average on the way down, you're going to come out ahead in the long run, I promise you. All right, and then the positions that didn't end up getting filled was an XLK, which was my hedge. If you guys were following along, you know what I'm talking about. But this was a hedge, and I just decided I wanted to do GTC, but I misclicked on that. GTC is good till canceled, but it ended up canceling on the day. But I'll go ahead and put that in again. But I wanted to go ahead and try to take a 40% profit on this hedge because I have 200 contracts, so I was only going to do 50, but try to catch us some swings on the way up because it's not crashing. But we're going to go ahead and hold on to those until next January, just in case the market does crash. We're going to get paid pretty nicely on that, and they're so cheap to get in, you might as well. Check out the other videos on that if you're interested in hedges. And also, we're trying to get into an ARC F because ARC F was way down and didn't hit. We tried to get in at $16. We'll see. It was a leap. And then THCX was going up a lot, and if it had dipped, I would have bought it, but it didn't, so it's okay. Just biding my time on this. I'm not in any rush. I don't try to force positions because if you do that, you're going to lose in the long run. It's not a viable strategy. But nevertheless, moving on to the recovery plays, probably what everyone has been waiting for. So, first one is Visa. Now keep in mind, these are not going to be the normal growth stocks, technology stocks, the stocks of the future, in my opinion. This is not it. But these have suffered so much from COVID-19 that I think that they will have a good time the rest of 2021 because we're opening back up. Things are on the up and up. Government's printing more money. COVID is going down. Unemployment should be going up. We'll see about that though, but it should be, in theory. But we're returning to the norm. So these should benefit the most, and that's what we're seeing right now. We're seeing a transition into these. And in the last week, these are performing very, very well. And I don't think that it's too late to, even though some of these are up 15-20% in the past couple of days. Most of them are going up 5% per day. And I don't think it's too late because if they pull back, I'm a buyer. If they don't pull back, I'm not a buyer. And the point is, this is a confirmation that these are good buys right now because they are going up. So if they do pull back, I will buy it. Possibly dollar cost average, possibly just wait till the support and get some option contracts, but we'll see overall. Anyways, the first one is Visa. I think that all credit card companies are going up. People are getting their jobs back. People are going back to work. People are getting more money from the stimulus. Overall, people will spend more money. Malls are opening up. People are going to go shopping if they still want to go to malls. But a lot of the malls are transitioning into more luxury. And people could go for the experience. Even though, of course, a lot of people use Amazon and Shopify now. But still, that is spending money too. So I think no matter if it's Visa, MasterCard, Amex, Discover, I think these are all good buys right now. I put a target at $250. It's a little ways out, and this is not a very steep incline for the slope. And it does seem to be trading in between these channels. So I give it 6 to 10 months, end of year pretty much, to hit 250. I think it's possible. With the rest of the year, pending a market crash, I think these should do very well. Entry is around 210. Like I said, it's trading for around 220 right now, it looks like. So if it's less than $210, I'm a buyer. Like I said, it's just confirmation that this is going up. And the risk is a 3. All right, and then the next one is Marriott International, or really any major hotel brand. The catalyst here is, again, economic recovery, return to norm, increase in travel, increase in tourism. These all should be going up. Target price I set for Marriott is $170. I think this is a no-brainer. I really do. It's already trading at $157. So again, if it pulls back to support, I'm a buyer. But I don't think that there's any downside left to these. And if you zoom out on most of these, you can see that these are still cheap, actually, even though they are up 15 to 20% already. And then I give it a 4 to 6 months, so a little bit shorter on that. Risk of 3. Entry, I'm going to try to enter at support or dollar cost average on the way down. More interested in leaps on these just to give them time, to be honest with you, or maybe at least 6-monthers, 6-month calls. The next one is Royal Caribbean. I chose Royal Caribbean, or you could choose Norwegian. I mean, there's a lot. Carnival. These were some of the biggest hit sectors in the travel and tourism industry. As long as jets, you could take a look at jets too, any airliners. But nevertheless, I chose Royal Caribbean here. I do like it. It's definitely bounced up, but I do see that there is a resistance. So I'm thinking either tomorrow or maybe Friday, these are going to start pulling back because they are starting to become pretty overbought right now in the short term. So we'll see if there's going to be a pullback, but don't FOMO into these right now, I think. You know, if you were already holding some of them, which I know a lot of you guys were, so then it's good for you. You're printing money right now. But if you're not, this is our confirmation that these are going to take off. So wait for a small pullback, maybe pull back to support. I'm possibly thinking this gap up, maybe a new support is going to form. But anyways, target price 170. Oh, that's not right. I need to change that to 110. Sorry, guys. My target price is actually $110, and it's almost up there. I only gave it 3 to 5 months. If it does pull back, I would expect 5 months. If it doesn't, I would expect relatively soon. But just to be conservative, I did do 3 to 5 months. Entry point, I would like it around $80 or less. We'll see. And risk is a 3. Alrighty, and the last one is going to be Caterpillar. And this is actually one that I had called out before. And again, guys, if you go up to the search box and you type in CAT, the ticker, you will see that we first started talking about it on January the 21st. So that was about a month. That was more than a month ago. We were calling out Caterpillar. And we were calling it out. Excuse me, guys. We're calling out right around here, and it did hit our support, and it started bouncing up. Now, Caterpillar has, not only does it has the autonomous tech, you know, they have the mining vehicles and the quarries that are driving itself and doing a really good job of driving itself. But not only do they have that, but also they have exposure to oil, and oil is going up. So I think this is a really good buy for an economic recovery. Oil stocks are all up right now. And maybe you guys don't know, but Caterpillar actually does have an oil position. So this could be very interesting, plus the autonomous factor on here. But anyways, I went ahead and had to move my target price, move my entry up, because this has already hit our target today. So we went ahead and adjusted that. We're going to adjust it on the watch list, prostockadvice.com/watchlist. But our target, if it pulls back to our support, I'm a much bigger buyer than I am right now. And I will bide my time. I'm not in a rush. I don't force positions. And that's really the key to long-term success here. Not FOMOing, not YOLOing, and don't force them. Be patient. The slow and steady wins the race. We try to get rich slow, not get rich fast. But anyways, time frame 3 to 5 months. Pulls back a little bit, goes up to 240. Something like that. Anyways, guys, I appreciate you once again. Now keep in mind, all of these recovery stocks, I set them at risk of 3 because I believe that there is a big catalyst here, a catalyst of economic recovery. All of these that I mentioned will benefit. They already are benefiting. If you already have positions in these, you're printing money, like I said. But if they pull back, we're going to go ahead and get into them. The mood has changed. Do you still believe it's going to crash? I mean, come on, guys. It's just like 5-6 days ago, we came off of all-time highs for the NASDAQ. Of course, it's going to pull back a little bit, especially with the economy opening up. Money's going to flow into these that have underperformed It's just normal. So we're going to try to catch some waves too on the recovery stocks. Keep in mind, risk is 1 to 5. 1 is the least risky, 5 is the most risky. The ones you should be in more, bigger positions, and then 5s you should be smaller positions. That's just how it works. That's just how you play it safe, guys. And don't forget to follow me on Twitter. We do the live trades there. I post screenshots of everything we're doing from the live streams, the live trades. Go ahead and subscribe. Turn on the notifications for YouTube because you're going to know when we live stream. Join the Discord, and I @ everyone when a new live stream is available. So try not to miss those. You're going to be the first ones to know. And everything we just talked about right now in this video, the people on the live stream, we already talked about it with them. So you're going to know beforehand. But anyways, guys, I do appreciate you, and remember, I do the one-on-ones. If I'm talking too fast right now, if you guys have no idea what I'm talking about and you need me to sit down with you on Zoom, screen share, just hover over with my mouse and tell you, okay, you click this for an iron condor, and this means this. Here's the graph. Show you specifically if you had any questions. I do some coaching, just general stock market education. If you guys are new. So go ahead and email me through the contact section of my website if you're interested in that. Anyways, guys, I do appreciate you for following along. Make sure you're subscribed. We're trying to get up to 2,000 subscribers is our next goal. But anyways, see you guys on the other side. Peace.